Or if I am under $500,000 in superannuation, I can actually go ahead and I can put away, say, I can go up to the 5 years. So if I haven't put away any, you could then put away like $150,000 in 1 year. 5 years, 30,000. I'll let you guys do that thinking. And then the other items are thinking about if you've gotten a pay rise recently and you've been able to live comfortably, you don't expect any, I guess, increase in lifestyle. It might be wise to put the difference in the pay rise into super as a voluntary superannuation contribution, or if you receive a bonus yearly, maybe put that bonus away into super, more tax effective that way as well. Or say you sold an asset that was, even if it was $500, or a used car that you sold, if you weren't needing that money for anything else, that would be a great option to put it into your super as an extra bump up. The next thing would be to check the investment option that you're in. So as you know, when you first sign up to super, if you don't elect or specify, they're just going to put you in the default bucket for you, and that may or may not be the highest earning bucket. So depending on your risk appetite, you could put it into higher, I guess a more lucrative in the long run investment option, but then you'd need to, it obviously would be more risky, and depending on your situation, you would need to be careful there in what you elect. But for example, I wouldn't want all of mine in bonds because I'm not going to earn as much in investment returns as I would in shares. So it's just something to look at. And yeah, it's always good to look into your super either way and just know what you're invested in. The next thing would be, seems like an easy one, but of course not everyone has done this yet, and with different kind of casual jobs, even while you're at uni, or sometimes you have second employment, it's important to consolidate those superannuation funds. So having multiple superannuation funds has multiple fees, and that's just not good for you long term. So go onto the ATO website, Australian Taxation Office, and press that merge button, and it's so simple and easy. Highly recommend doing that. The next thing would be to check your fees and insurance. So I've touched briefly on this in another video, but always important to know what you're getting, all your fees are in relation to. So there's on some default funds, they'll have signed you up to death benefit, income protection, and other insurances in relation to super. So depending on your circumstance, you may or may not need them, or you might not need it at the same level of cover that they've default you for to cover you at. So you might be able to reduce those premiums weekly. But again, just for your personal circumstance, and if you want to kind of keep topping up that bucket to where it needs to be, worthwhile investigating that. Also, what I would say is all of those tips that I've just gone through,